Hello everyone, this is Kishore. Welcome back to my channel. Today I would like to go over major market indices chart analysis, market breadth charts, and also I'd like to share some of the data like dark pool data, commodity traders index, option gex for major indices, and also some of the seasonality charts. Next week earnings calendar, economic calendar, and I'd like to share some of the clues for market drop in the month of July. And is really carry trade tumble the market? Gold price prediction. Does gold price make a new highs or not? This is not a financial advice, just for knowledge purpose only. Let's jump into the show. CNN fear and greed index, it came to extreme fear. We know that last couple of months it is in the greed and extreme greed level. Finally, it came to the extreme fear level. And sector performance last 1 week, industrials and energy perform well. It both are up more than 1%, and consumer discretionary materials are down by more than 1%. But there is no clear indication of rotation of money from cyclical to a non-cyclical or risk onto the risk off levels. And this is the heat map for the ETFs, a weekly heat map. SMH performed well, more than up 2%, and also the crude oil is up more than 3%. And this is last week major US economic report. Consumer credit came 8.9 billion, but the expected is 9.7 billion. So there is a lower estimate, lower than the estimated one. Let's see how the retail sales impact with this data. And initial jobless came better than the expected one. The expected is 240,000, but it came 233,000, which is good for the economy, but it's not good for the Fed rate cut perspective. And next week economic calendar, on Tuesday we have a PPI data, and Wednesday we have the CPI data. Both are very very important in with the perspective of the Fed rate cuts. And on Thursday, we have Empire State Manufacturing Survey, Philadelphia Fed Manufacturing Survey, and Industrial Production. These are also very, very important. And on Friday, we have consumer sentiment. This is considered very important for the recession perspective. So in the recession, one of the parameters, this one, they'll look into this consumer sentiment. And percentage frequency of S&P 500 negative total returns by calendar month from 1950 to 2024. So on each month, how the S&P 500 returned negative values. So on August and September, there is a high chance of the negative returns in the S&P 500 compared to any other months. And this is when if Fed rate cuts, is it good for the stocks or not? So it is good only if there is no recession. The thick green color is says if there is no recession in the economy, then it is Fed rate cut is very really good for the stock market. Otherwise, it is not at all good. It's my stock market can go down easily. And investor behind record 2.7 billion bond bet says recession is near. One of the investors they bought 2.7 billion bond TLT bonds with the recession fear. So this is the dark pool data for the TLT last 60 days. And in the month of July, we can clearly see that there is a 900 million dark pool, and there is a 400 million dark pool, and also there is a nearly 350 million dark pool on the month of July. So nearly 1.5 to 1.6 billion dark pool data came for the TLT. So we can consider that 2.7 billion, whoever saying the investor bought the TLT, they may bought like 1.5 to 1.6 billion TLT through dark pool. And this is gold price. In the top chart is the gold price, and the bottom is US 2-year yield chart. So when 2-year yield is going down, gold price goes up. So in year 2000 and 2001, when 2-year yield goes down, gold price is flat. It's not went up crazily or it went down crazily. But in the year of 2006 and 2008, when 2-year yield goes down, gold price went up. And again in 2018 to 2020, when 2-year yield went down and gold price went up. So if Fed rate cuts the interest rates, then there is a high chance 2-year bond yield goes down that and gold price can go up. And if you see the gold price on the weekly chart, it is making the bull flag. Bull flag is a bullish pattern. So there is a high chance if it breaks upside, then 2700 is my first target and 3000 is my next target. And this is after the first Fed cut, value led growth for the 6 months, small led large for the 3, 6, and 12 month, and bond led stock. So consider that if the Fed cut the rate, so which type of stocks uh, perform well in the next 3, 6, and 12 months. So first 6 months, value stocks perform well, better than the growth stocks, and for the third month, 6 months, 12 months, small cap stocks do better than the large cap stocks. And this is second quarter is expected to be the first EPS growth quarter for the other 493. So we saw that if Fed cut rates, it is good for the small cap stocks. So whether the fundamentals are supporting or not, and this chart says that EPS growth is good in the second quarter from the second quarter for the small cap. So fundamentals also supporting the bull side. And this is either high yield bonds overpriced or the small caps undervalued. So we saw Fed cut helps the small cap, and also EPS helps the small caps. So whether the money comes from the outside or money rotated from the high technology or growth stocks are small cap stocks. So this tells high yield is overpriced right now. So there is the huge divergence between the high yield and the small cap. Similarly, we had this kind of divergence in the year 1998, 99, and then later in the year 2002 or 2003, they both matched, and small cap went up and high yield came down. So similarly, I'm expecting the same money rotate from the growth stocks or large cap stocks to the small cap stocks, and so this is also bullish sent to the small cap stocks. And S&P 500 10% corrections, and if there is S&P 500 10% correction, and within the 3 months they cut the Fed cut the rate, and in that context S&P 500 make a new low within next 2 months. So based on the history, this is what they're saying. S&P 500 now S&P 500 is almost down by 10%, like 9.64 or 9.65%, and there's a high chance of Fed rate cut in the month of September. So if it happens, then there's a chance of bottoming of market happens within the next 2 months. So as people are saying that it's already down by 10%. So is there any chance to S&P 500 goes down? So we can clearly see here almost 350 days. This report came on June or beginning of July. So we can consider like now it almost like three after 350 days S&P down more than 2%. So it's a huge bull run happened in last 1.5 year. So after in the based on this history, after huge bull run like in the year 2008, we can clearly see here after 351 days, first time there's a two more than 2% S&P down. After that, it happened quite frequently, not like 300 days or 200 days at least. So similarly, now after 350 days, S&P 500 is down more than 2%. So there is a chance. Similarly, very frequently, like 50 days or 100 days like that, there's a high chance of 2% down of the S&P 500. And this is S&P 500 operating profit margin. So we are saying that there's a high chance of 2% S&P 500 down quite often, like within every 50 days or 100 days. So is the fundamentals or idea that support is there. So operating profit margin right now it is 12.1%, but on average it is 8.9%. So in the past, based on this history, whenever it went up above the average price, profit margin, it came back to the hitting that average price. So it happened in the year 2008, and it happened in the year 2014, and happened in 2019. So similarly, it may happen now as well. And this is 5-day put call ratio daily chart. So we know that it market was went down in the end of July to the August first week. So, are there any charts or data predicted this one? This is one of the chart, like 5-day put call ratio. It went less than 0.7 on July 10th, and it is very complacent at the time. And it happened similarly in December of 23 and July of 23. And when it happened like that, market was down. So this is one of the chart we need to look into it in the future. If there is a put call ratio, 5-day put call ratio below 0.71, then we need to be a little cautious on the bull side. And this is another chart, CTA positioning in the US equities. This chart came on July 24th, and they said like over next 1 week, if the tape is flat, they want to sell 170 million, and tape is up, they want to sell 902 million. If it is tape is down, they want to sell 7.9 billion. So CTA is a commodity trader advisors. They want to sell the equity if the market goes down, or if they want, and they want to sell equity on even up at in flat. So looks like based on this data, so they might sell more than 7 billion or more than 1 billion at least of equity. And this is another one. So everyone is saying the carry talking about the carry trade is the one of the issue why market down. So is it happened in the history or not? So Seth Golden, he posted in the Twitter, in the X, he mentioned like it happened in the year 1998, and at the time market was down almost 19.3%. So carry trade is a real issue. We know that carry trade is like a borrowing for the less interest and giving for a higher interest. So because of the N, the Japan has interest rates, so N was fallen, and it impacted the whole futures market and the equity market. And as we talked about the commodity traders, I give very high respect to the commodity traders, because I feel they are very smart people. So this is COT index chart. So they say right now they're saying S&P 500, Nasdaq, Russell, and Dow all are. I mean, at least S&P 500, Nasdaq, Russell, they are bearish on the side. Dow is not bearish or bullish. It is at 74%. If it is above 80%, then that is considered the bullish one. Only bullish is VIX futures, and this is also one of the chart, one of the data I pointed in the month of July beginning. VIX futures are bullish. Even in my last video 3 weeks back, I made a video. In that video also I mentioned the same. Big switches are bullish, so we need to be cautious on the bull side, long side. So now also big switches are bullish, so we need to be a little bit cautious on the long side. And this is high yield. So high yield bonds, I use this to find the liquidity is coming to the market or going out of the market. So right now it is at last couple of, it's a weekly chart, last couple of weeks it is in the range bound between the 76.5 and 78. If it goes above 78, then I consider money is coming into the market and it is good for the stocks. If it is going below 76.5, then that's not good for the market, money is going out of the market. And this is SPY monthly chart. On July it is made a shooting star kind of spinning top kind of candle. And in the August is, if it closes red, then that spinning top is confirmed. And SPY weekly chart. So we had a three black cross pattern. It happened last year July also, and then it bounced 2 weeks, and again it tumbled till October. So similarly now also we have the three black cross, and then we had a green candle. Let's see whether it follows the similar kind of pattern the last year or not. And this is SPY daily chart. So right now we bounced around the 510 levels up to 532, and Fibonacci 0.5 level is 537, and there is a gap there. So I give very importance to the gap and the Fibonacci levels. So there is a high chance it can go to the 537 level, and there is a huge dark pool at the 542 level. So 537 and 542 is my upper target for the SPY. And this is a dark pool data for SPY. We can clearly see there are a lot of dark pools at the 540 or 542 levels. So to break this level, it needs a lot of strength. And this is SPY options for the Monday, and there is a negative gets at the 535 level and the 530 level. So there is a high chance market can go either 530 and bounce, and there's a high 535 is the upper limit for the SPY. And on the right side, you can clearly see here ES futures for SPY open interest change for the Monday. And right now 5370. So on the downside there is a high chance it can go to the 530 5300, and the upside we have 5425. So the lower range is 5300 and the upper range is 5425 for the ES futures. And this is QQQ monthly chart, and this also made a spinning top kind of candle in the month of July, and then August it went down. And on a weekly chart, similarly SPY we had a three black cross pattern, which has happened last year July also. Let's see whether it follows the last year pattern or not. But we can clearly see here on the red days the volumes are up, and also on the last week also volume is up. So we need the follow through day to go up to make sure it's just bottom. And this is quick daily chart. Right now it's at 450 level, and there is a Fibonacci level and the gap at the 454 level, and the volume is going down on the in the bounce. So I do consider it's a bearish sign. So let's see if it goes up at 454 is the my upper limit, and the downside is 440 is the first target. And this is the dark pool for the QQQ. There is a lot of dark pools at the 460 levels and the 450 levels. So let's see if it breaks, then that's very very good sign for the bulls. And this is the option for the QQQ Monday. So there's a negative gets at the 445 level and 448 level, and a positive gets at the 450. So I see that 450 is the highest thing. If it goes up, 450 is the wall. And this IWM monthly chart. So on July it made a very good bullish candle, and on August right now it looks like a very bearish. So if it is the closest at this level like 206 or 200, then it form a twister top kind of candle, which is a bearish pattern. And the weekly chart, so right now we break one level like 200 level and went up 206, and again there is a choppiness between the 200 and 206 levels last couple of weeks. So it should break that and go up, then there's high chance it can go up to the 240 levels. And this is IWM daily chart, and there is a gap at 212, and the Fibonacci level at 212. So gap and Fibonacci level acts as a magnet most of the time. So if it goes there, if it rejects, then it can go down, because the upside trend upside volume is going down is a bearish sign to me. And IWM options on Monday, so positive gets at the 208 level. So there is a chance if it goes up, 208 is acts as a resistance to the IWM. And on the right side, RTY IWM futures, on the lot of open interest change happened on the downside on the put side. So I'm thinking it may go down based on this one, but let's see. And next week, this is the next week earnings calendar. I'm focusing on this on Monday, which is a very very good company. I like that company a lot, and NU is one of the good bank. SCA, Home Depot. I want to see how it performs, because bad real estate purchases or whatever. So let us see how it's going to be the report. And also Alibaba, Walmart, JD, John Deere, these are the four I'm looking, and AMET is one of my favorite stocks. So these are the stocks I'm looking for the next week earnings. The summary is volatility stays for a while. We see that still market bottomed or not. The fear and greed index, it is in the extremely fear. So volatility stays right now. And market bonds with low volume is a major concern. We saw that price is going up, but with low volumes, that's not a good sign for the bulls. Seasonality is not favoring bulls. We saw that August and September is negative returns, higher chance, higher probability of the months of all months, and possible leadership change from the technology to the small cap. We saw that when the Fed cut rates, then high money moved from the high yield to the small cap, and economic conditions and gold price charts are favoring bulls. We saw that if two-year bond yields goes down, that helps the gold price to go up. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like that, please subscribe. Please share this content if any of your friends looking similar kind of content. Thank you so much. Bye bye.